Hi, everyone. My name is Calvin Lowe from PEACEQuity. Thank you for taking time out of your schedules to join me today, as I'm excited to present a wonderful multifamily apartment investment opportunity called the South Salt Lake Portfolio in Salt Lake City, Utah. Before we get started, the sponsor team attorney has asked me to disclose this following information. I'd like you to read this, and please do your due diligence. I like to say this is a 506c opportunity, which means you have to be an accredited investor to invest in this. If you're not an accredited investor, you will not be able to invest, but I encourage you to continue to listen throughout the webinar presentation and then make an appointment with me, and I'll be more than happy to discuss your financial goals. Again, my name is Dr. Calvin Lowe. I'm excited to be here to guide and lead us through this. Let me give you some information about myself, and I hope this will be helpful for those who are considering investing for the first time. I'm a full-time pediatric emergency medicine physician. I'm also the medical director of a pediatric critical care transport team at Children's Hospital Los Angeles. Over my 30-year career, I've had the joy of having a positive impact of the most critically ill children in providing hope and security to their parents and families. But as I look back, I've worked numerous hours, the overnight ER shifts to the 24 to 48-hour transport shifts. And the demanding schedules have really taken their toll on me. And the one thing I wish I could have or get back is time. The time I didn't get to spend with my wife, Peggy, and my kids. And I paid the price and missed out on many special moments. And I'm sure many of you with a busy work schedule feel the same way, wanting to have that valuable time back that you have missed with the special people in your lives. We've seen firsthand how investing passively can make an immediate impact to our lifestyle. Passive income has been working for us, so I won't have to keep working so hard. Some of you may have reservations of taking the next step, but we're passionate in helping others achieve their goals. In fact, I wish we started this 20 years ago, and I'm committed to putting an end to losing out on special times with my immediate and extended family. It's my hope that the information provided today will help you in your path to passive income. So this slide describes a little bit about our company called PEACEQuity. It was founded with the philosophy of family, peace of mind, and generational wealth. And our company's acronym has very special meaning because the first four letters represent the first four names or initials of our family's first names, Peggy, Elizabeth, Austin, and Calvin. And we emphasize relationships that are based on mutual trust, sort of like family ties. We have a diverse investment portfolio, over 700 units across California, Arizona, Texas, and Utah. We serve as capital raisers in various partnerships. Again, I am a pediatric emergency medicine physician, and Peggy is a former graphic designer for a global brand identification products provider. Now, when I first started in the realm of multifamily apartment investing, I had to learn many things about that. I actually was the master of ceremonies of two national multifamily investing real estate conventions. They're both were through Vertical Street Ventures, VSV Con. And as the MC, I leveraged that position to meet speakers, the big people in the arena. And it's all about trust and relationship. And here I met Brian Briscoe. Brian is the founder and owner, the visionary of Streamline Capital Group. He's been a general partner in over 1,500 units nationwide, worth over $150 million. And he's also been a lead sponsor, asset manager, capital raiser, and key principal on these properties. He founded Streamline Capital Group to focus on buying and managing apartments along the Wasatch Front in northern Utah, which is the greater Salt Lake City area. He is a graduate of the University of Utah and a veteran of the United States Marine Corps. And just vetting him as a potential partner, I was looking back at his investment history. You can see here of the projects that he's had, all except one had an IRR in double digits. The one that was only 9% was his first property that he purchased. I'm pleased to say that our companies came together and we partnered on a deal that closed in December of 2023. This was the Eleanor Rigby Apartments in downtown Salt Lake City. It was 43 units. Our projected multiple is anywhere from 3.75 to almost 5x. And we're happy to say our first distributions were already given out in June of 2024. So why Utah? One of the great things about Utah, it's a thriving market opportunity. It's one of the fastest growing states in the nation. You can see here in terms of the different indices, it ranks in the top three, especially for best state and best economy. They rank number one, number two for the best state for job opportunities, and also the rank number one for the best state in the middle class. Salt Lake City makes it a great place to invest. You can see the population here. Even though it's a very small portion in terms of geography dimensions in the state of Utah, it has about a third of the entire state's population. And as you can see there, it was going to grow to a little over 8% over the next 5 years. The median income is a little more than almost 5.5, a little more than 5.5% over the national average, about $82,000. Unemployment is very low. It's well below the national average of almost 4%. And look at the median age is one of the youngest, and this group represents one of the largest rental pools. What's great about Salt Lake City's location makes it a great strategic destination for businesses. Along with International Airport, Salt Lake City also intersects with Interstate 80, Interstate 15, and the Union Pacific Railroad Intermodal Hub. The Salt Lake City International Airport is a major asset to the state as it's served by 10 different airlines and over 23 million passengers annually. It also represents the biggest gateway to 10 major ski resorts, 5 national parks, and 42 state parks. There's also the strong demographics are also the foundation of sustained economic growth. The educated and diverse workforce in Salt Lake City makes it an ideal location for top companies in information technology, finance, outdoor products, and manufacturing. And global companies that move into Salt Lake City consistently, that have moved into Salt Lake City, have chosen to reinvest in Salt Lake City, as demonstrated by recent expansions by Delta, Fidelity, Goldman Sachs, UPS, and more. And Salt Lake City is also home to a large homegrown institutions that offer an essential mix of services and employment opportunities. And one of the big things that just happened recently is that or two things in the sports world, the National Hockey League established the Utah Hockey Club, which will start play in the fall of 2024. And also recently, the 2034 Winter Olympics have also been awarded to Salt Lake City. So lots of excitement and growth that's coming up in the near future for Salt Lake City. Also, the Salt Lake portfolio offers the commute for those in school. As you can see here on the map here, you can see the Blair Street and White Pines. Those are the two properties that are in the portfolio. So it's the perfect commute for those in school. Its proximity to some of the best and largest schools in the state is extremely beneficial to prospective students. Also, 3 of the largest universities in the state, the University of Utah, Westminster University, and Salt Lake Community College, are all within 15 minutes of the properties. In 2023, the higher education system in Utah supported about 130 jobs, making it one of the largest employers in the state. And providing its focus on education and workforce, Utah's higher education directly contributes over $11.3 billion to the state's economy. Let's talk about the portfolio here. It consists of 2 properties, a 24-unit and a 56-unit apartment complex in Salt Lake City. These assets are directly in the path of progress and just south of downtown. The first one is White Pines apartment. Oops. And this is a 1964 build, a B class asset. The second, the smaller one, is Blair Street Apartments, 24 units in 1977 build, and a C class asset. These properties are just about 5 minutes to downtown. It's just a few blocks of the major highways, which I talked about earlier. It's only 1.2 miles from each other, and these are easy access to all the ski resorts, the airport, the Temple Square, again, the professional sports, and many, many more. White Pines is situated in the developing Salt Lake City area. We love this location because the current sellers have renovated all the interior units. So basically, we just have to freshen up the outdoors. The current owner was not able to finish the exterior renovations due to rising interest rates, and they really haven't taken advantage of the additional revenue streams for pet rent and storage rentals. So the value added plan for this property is to be adding a pergola, custom built gas grills, benches, and off the leash dog areas. These items don't really directly add income to the property, but they make it more desirable for current and prospective residents, which will increase renewal rates, decrease vacancies, and over time allow us to charge more rents. When we did the due diligence, we were visiting the property the first time and looking over the rent roll. We saw that only 5 residents were paying pet rent. As we walked through the property, we saw that there were approximately 40 residents that have pets. And we intend to keep the property pet friendly and add a modest pet rent to all residents with pets. And this by itself will add approximately $18,000 per year in income. There's also currently 25 storage units for 56 units. We plan to add additional storage units and charge the residents to use them, which should add an additional $12,000 per year in income. As you can see here, the exterior on the left side of the slide here. So these areas just need to be freshened up. We're going to take down the playground, make it more safe for the children there, redo the balconies in the stairway. Also, you can see here in the bottom slide here, there's open areas. Those are where we can build the new storage units that we can charge extra fees for these. In the interior, again, these were all done by, all renovated. All 54 units have been, 56 units have been renovated by the current owner. You can see they've actually done a great job. Blair Street is just a few miles north of White Pines. It's actually situated in a nice, quiet street. And right now it's being managed by a mom and pop organization. It's been really maintained very well. It's really just in a nice area off the main road. And again, the interior of these units are really nice and clean and kept pretty well. Our value add plan to this is to redesign the exterior to freshen up the curb appeal, to modernize the mansard roof style. Again, repaint the exterior, improve the landscaping, fix the covered parking structure, upgrade the laundry facility. Since it is only a mile away from the other, from White Pines, these will be professionally managed from both properties from the leasing office from White Pines. Currently, the laundry facilities are coin operated on site, but who has quarters to use all the time? So we are planning to replace with a app-based payment capability to increase revenue, and this will produce an additional $3,000 to $5,000 income per year. Another thing that the current owners they do bill the residents for utilities, but doesn't really capture the entire utility expense. We're going to implement a ratio utility billing service called RUBS to cover our expenses. So the additional income will be another $3,000 to $5,000 per year. And the current owner doesn't charge for any market rates for other common item income, such as the storage unit rentals, parking, common area maintenance fees, and the total income from these fees will be estimated from $7,000 to $10,000 a year. I can see from these photos here, we're going to freshen up the exterior. As you can see there, that we're going to redo the mansard style roofs, put a nice coat of fresh paint. And you can see the interior pictures from here that the apartment units are kept up pretty well as well. This is the investment highlights. We are going to purchase the properties both for a little more than $17.4 million, which averages about $217,000 per unit. Again, it's 80 units. Our hold time is 5 to 10 years, and it depends on what the market's going to be during that period of time. and we need to raise about $7.2 million for this project, or total equity. This is where we're looking here. Our underwriting is planned for the worst, but expect for the best. So as you can see there, we will looking at a refinance window at year 3 to 5. And at any time during the hold period, if the market conditions are great, the numbers work out, we will sell the property and return the capital and plus as the multiples to the partners who invest with us. We do plan to hold for 10 years because the longer that we hold it, the more optimism we have so that we can outrun any type of recession. So we're just planning that the market will recover within the next 5 years and go from there. Some risk and mitigation, some things that we always have to look for. Some of the risks that we have with any property is poor management, keeping the vacancy down, any unforeseen events. And to mitigate that, again, we have the on-site leasing office at White Pines. Again, they will also manage the Blair Street apartments just a little over a mile away. Our business plan is focused on a long-term hold, like I said before, to a longer-term hold will outlast a recession. We also have comprehensive insurance, a healthy property reserves, and a CapEx budget that's just in case for anything that's unforeseen, and those all going to be there for us as good buffers. Two types of shares in terms of we want to invest. There's a Class C share with a minimum investment of $250,000. The preferred return is 8%. The LP, the limited partners, general partner split is 80-20. So you can have a multiple equity projected at over a little more than 3x with an internal rate of return of 16.6. We also have the Class D shares, the minimum investment of $100,000 is a 6% pref return. The LP-GP split is 75-25. Projected multiple, equity multiple is almost 3, and the IRR is almost 16%. The management team will be part of that with Streamline Capital. We will have our weekly general partnership meetings to discuss anything with the property management team, all the financials. How we would communicate with our investors. We have monthly newsletters. We could also have quarterly webinars, which is really nice to show some videos or have a live Q&A sessions with our investors. Also, you can also go through the investor portal, or we're also available by phone because my philosophy is that we want to be transparent with you, with your money, because we want to make sure you know where your money is going to be working. So if you're ready to invest, we are taking soft commits now until August 16th. The legal docs are ready, and also the funding window is now. This is the QR code to our investor portal through InvestNext, and go ahead and use that. I'll have a slide with the other QR codes, but it's something that you can go through, read about more about the investment. There you can also communicate with us, and we can answer any questions you might have. This is how you contact us here. This is our numbers and email addresses. You can use this QR code here to schedule a Zoom call. We'd be more than happy to answer any questions you might have. Or if you're ready to invest and have some more questions, please contact us by, again, our phone numbers, email, or could schedule a Zoom call. Just want to say that Salt Lake City offers a great investment opportunity due to its robust economic growth, low unemployment rates, has a high quality of life and a strong job market, driven by a vibrant tech sector, and it makes a great exclusive market for savvy investors. And the city's mix of urban amenities and outdoor recreation attracts a diverse and dynamic tenant base, ensuring steady occupancy rates and potential for long-term appreciation. By tapping into Salt Lake City's multifamily market, investors can leverage these favorable conditions to achieve strong, sustainable returns. And looking ahead, property values are expected to rise, and current rents are below market rate, indicating significant potential for growth. So I hope that you are excited about this as I am. And here are the different QR codes I can use. I'll just leave this here for that you can click on your phone, get to the different areas. The first one on the left is the investor deck, which includes these slides, but also has some more detailed financial information for those of you who want to go more into the underwriting and see where we're going with this. The middle one leads you to the PEACEQuity InvestNet portal if you're ready to invest, or if you want to go ahead and put your soft commits in. Again, we need to have them by your soft commits in by August 16th. Or if you have any questions, please schedule a Zoom call with myself and Peggy. And this is through a Zoom link right there. So I want to thank you for, again, taking our time out of your busy schedules to learn about the South Salt Lake portfolio. And I hope that we can partner with each other in the future. Thanks, everybody.